Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, gold is warning us we're all going on a diet next year. What am I talking about? We're going to dive into that in this video. So let's get to it.
Trade Genius.
Hey everybody, Bob Trade Genius here. Peace, love, and Trade Genius. Spring into some savings with us right now. We got some great specials running. Market is in unprecedented areas right now. We think we got a good handle on it. Go to tradelikeagenius.com. Take advantage of our spring specials. Thanks for listening. See you later.
Bob, a really interesting chart you got here where gold is forecasting with extremely high accuracy what to expect when it comes to, what we're going to be paying for food. Anyway, I'll let you take it away, but I thought this is extremely interesting and really probably important for the next 12 to 18 months.
Yeah, I love charts like this, Phil, because I like when you get a chance for a warning and get some alpha here. Mm-hmm. And in this case, it's actually to position you to be able to survive next year. We always said that 2025 is going to be really an interesting year because, the new president's going to be in there, or the old one's going to have his last term. And they usually let the stock market go crazy. The debt's piling up, inflation's piling up, gold at all-time highs, Bitcoin's at all-time highs. And we have a chart from McClellan. If we put up here, hat tip to him. Thank you for letting me share this. Check him out on Twitter. This guy's pure gold, pardon the pun. But he looks at data correlations that are meaningful. And he basically says the price of gold will forecast the rate of change in the price of food inflation a year out. And gold has just been moving this year. And I think you're going to start seeing food inflation start to follow suit. And we have some charts here to show you, Phil, about some of these food stocks that are starting to move. So we have a chance to maybe protect ourselves. So that's that chart. It's really important you guys understand it. It's interesting. I'm looking at Bitcoin now. It's kind of like, hey, we got to get ahead of the curve. And gold's sitting back saying, hey, I'm the old guy on the block here. I'm going to start warning the old folks here that start paying attention to the world. But you don't need gold to tell you that something's wrong. Look at this next chart or picture. This is Five Guys. Five Guys tends to be a little pricey anyway, but a burger and a fry and a Coke for $25 in New York City. I rarely eat at Five Guys. The one that they're out here closed, but when I was in Florida, I was traveling from Orlando down to Tampa after our training, and there was Five Guys that, I'll just stop in. It was $19 in Florida for basically a double cheeseburger, fries, and a drink, which is outrageous. If you think about what's the price of beef, even, you can get, beef for $3.99 a pound. So these guys are just ripping everybody off, Phil. And the other thing I noticed too, I went for this meeting for our podcast. I looked at the price of soybeans, corn, and wheat and fertilizer. They're all pushing their lows, Phil. So you would think that they would be trying to lower prices, right? But that's not the case. Let me show you this next chart. This is Kroger, okay, a food company, okay? They just report it, and they did an outlook, and the thing shut up 10%. You know what they said? They're able to push price increases across the board. So you know what they're doing, Phil, right? They're buying at X, holding it for 30 days, selling it for X plus inflation, and they're starting to pocket the diff, and it's starting to show up in the bottom line. Isn't that amazing? Look at the worm was telling us, and that's not the only one. That one's already moved. So I told people this Kroger chart, we talked about this, Phil, I don't know, last week or 2 weeks ago, we told you guys this thing's going to move, and it moved. So if you're paying attention to the podcast, we made you some money.
Yep. Plus, too, we got our target extensions there above the Ranger when it breaks through the Ranger. So we're hitting that first target extension. So you're right. The move's done on this one. This is your first target, actually, or maybe even your second one above the range trader sell zone. And you are getting that sell arrow coming in there. But this was signaled months ago. It was time to go. What is this? A weekly chart. So yeah, that weekly signal is very, very, very powerful. And then you can just drill down your smaller time frames to kind of hone in your entry.
No, absolutely. Yeah, guys, if you want this, just go to tradelikeagenius.com, sign up for the service. We're finding them today, this morning. We had so many things we're firing buys, Phil. We, just like you just couldn't, we're drowning in a sea of opportunity. I hate it when it happens when you get 10 or 12 stocks, you can't signal them all out. That's why you have, we give you access to the Worm and the Ranger here and the Sniper and Kona so you can follow the stuff that you like, But here's one that's coming up. I'm give you guys another freebie. Okay, I already own this one. We've owned this one for a long time. Inverted Head and Shoulders. It's starting to pay out here, Phil. This is Cheesecake Factory. And so if the grocery stores are starting to get pricing, we know the restaurants are getting pricing action because, you just have to go to the restaurant and you're choking on the bill. But this one popped the vol stop. You notice, look at the worm last time. Really nice move. Pulled back, right back to the vol stop, which is that red line, and bouncing off that again. The worm is turning. Momentum still neutral, but I think there's a move on here. This one up to the Ranger too, Phil. Probably another 5% move in Cheesecake Factory, and we're at the neckline, so we may move up to that Ranger, the gray bar there, Phil. Come back down and test the breakout, and then this thing could move potentially another $6 or $7. So
Yep.
I would check this one out. Like I said, we find these every day in the room.
Yeah, the Ranger's going to target about 40.50 in that gray zone, like you mentioned, and then the extensions beyond that are $45 and then $50, which I think are pretty attainable if we get our scenario here where we get through the consolidation in March and then up into May, June potentially here.
Yeah, and it's not the only thing moving too. Since we're talking stocks, we put CCJ back on. Immediately, we got a 5% move from the signal. One that I just bought. I'm FOMOing it a little bit, but I think it's probably the only AI play that's going to have legs when SMCI and NVIDIA play themselves out is Palantir is doing some really interesting things. I would encourage people to listen to the CTO and the CEO talk about how that their system is working with unstructured data and turning it into meaningful information. And that I think this thing, software always trumps hardware. So when the hardware guys start getting played out, the software guys have basically unlimited upside once they get their code structured. So I'd keep that one on the back burner, buy it on any pullback, and I think you guys are going to like it a lot. So Phil, I'll end with you. Do you want to talk Bitcoin again? Because man, that thing's coiling up for another move.
Yeah. So, we talked about how we're going to hit an all-time high on that thing potentially, which we ended up doing. I think that when we talked on that day, we were actually experiencing a pullback and we said, hey, down to 59,000 or so is by the dip, and we got that. So very textbook, you poke a new high. That same thing happened back in 2020 when we made a new high at near 20,000. It pulled back. Very similar price action setting up, guys. So basically we are looking at consolidating here. Now today it ran back up to about 68, but I actually think we could rotate back down to 62 or 63. I wouldn't fret over that. We're just consolidating, and it's actually really healthy because if you're going to be coiling under an all-time high for several days, that actually builds up energy again for another move higher. And if you guys recall, we said funding on the derivatives was far too high. That got reset on that dump, and the longs versus the shorts ratio in terms of positioning also got reset a bit. So I think it was a very healthy dump. A 10K dump on Bitcoin at these levels should be expected. That is the type of volatility that it produces. But, along with that risk, you have just as much reward, if not more, to the upside. So that's just the nature of the beast with Bitcoin. So I think now with today's action in the stock markets, I think there's going to be some bullishness into OPEX. Now, if we get a dip after OPEX, then I think that's a buying op, because then I think we're going to be looking for a move out of March into April. And I think that's broad risk on rally for everything. So gold, Bitcoin, equities. I actually think tech might lag though on this one, because I think we're going to see remember we talked about rotating from alpha to alpha. So I think tech led the charge. We now are going to get some rotation and get into things that will catch up. I think small caps, right? The Russell probably plays catch up too. And so if there's any, if you think you missed out on the crypto move, and there's been some big movers, some of those AI names and things like that in crypto have moved a lot, but I think we're going to get a pullback at some point to get you an entry into those things. But you have to look at this as a pullback for basically a broad move up over the next couple of months as we get out of March and heading to that May, June timeframe.
Yeah, and one thing I'm noticing, anything that's been selling into earnings are they're getting 10, 12, 15% pops on these earning reports. So, look at those. I don't like to play earnings too much. I did this time BGS with a food company. We made 25% on. All these shorts are getting barbecued right now. So I think this is the last phase, guys. All the shorts are going to get blown up. Everybody's going to be thrown into the pool. And then at some point, we're going to get the rug pull. But remember, this happened in 2000, 2001. NASDAQ played itself out and everybody rotated into gold and to oil. And so I think, and uranium. And I think we're going to see that again. And then we're going to see a pretty decent pullback in the stock market index. But the commodities are going to keep running here because our government is unable to control. And it sounds like they don't even want to control the inflation. Powell's already given up and said, yeah, we make 2%. Maybe I'll still cut if we don't. So they know they can't get the this thing down unless we get into a full-on recession and we start getting unemployment rate going crazy. We were going to talk about that today. There's too many juicy things happening on the plus side, but there's suggestions here that 2025 is going to be a year of joblessness based on these indicators that are leading. And maybe we'll talk about that tomorrow. Tomorrow's the unemployment report. Maybe we'll throw that chart up there and we'll show it to you guys.
I agree. All right, guys, well, let us know your thoughts on today's video. As Bob mentioned, these indicators and these tools are available on our website. Just head over to tradegenius.co, and they're even included in some of the packages too for discount. So check out what we have over there, and we love to see you guys in the room with us. Thanks, Bob. We'll see you guys on the next episode. Take care.
Trade Genius.